Hi, everyone. Welcome. My name is Ara Topouzian. I'm the Executive Director for Michigan Venture Capital Association. I'm very excited because today is the day we released our annual research report. It's a comprehensive analysis of really the Michigan ecosystem as it pertains to both on the investment side and entrepreneurial side. And during these times, it's we've definitely deployed using a virtual platform. We normally would do this in person and pass out copies, but we're not able to do that quite yet. But I've got the next best thing. So joining me today are two board members. Our board chair, Michael Gross. He is a managing director at Beringea. And then our vice chair, Jeff Rinvelt. He is a partner at Renaissance Venture Capital. He's also the chair of our research report committee. And welcome, Michael, Jeff. Thanks for coming on today. And we're gonna jump into this real quickly. But thanks for being here with us.
Yeah, great to be here, Ara.
Yeah, thanks, Ara. I want to take a few moments and thank everybody for helping us get this data. The venture capital funds, really trust us with this data, and we take it sort of as not as a right, but as a privilege to basically collate this data and look into it. We also want to thank Entry Point. Entry Point is basically a huge thank you we need to give them. They're the ones that collect all the data, do a lot of the analysis. So if I sound smart, it's because of their analysis and all their hard work. Any errors are basically my own, but I do appreciate that. So thank you, guys. Thank you, everyone.
I'd like to also add that some special thanks for today, the Michigan Economic Development Corporation, who is supporting this event, this webinar. Thanks to the folks at the MEDC for their continued support. And then also to our service providers, our 2021 service providers, which you can find them all on our website at michiganvca.org. And then finally, last kind of bit of housekeeping is that please submit your questions. For all of you that are watching here today, submit questions in the chat and we will do our best to really get into that. All right, I'm just gonna jump in, Michael, Jeff. Initial thoughts of this year's report. We've been doing this now for several years, and what are your thoughts as far as outcomes that you read in this report, or anything that jumped out to you as a surprise or whatnot?
Sure. I think that the stat that jumped out to me was the record level of deals completed. So 88 companies in the state raised capital this year. So while overall VC investment was down, we were coming off 2 record years in VC investment. And I recall sitting here with you last year when we were launching the report, right in the middle of the pandemic, saying, yeah, what's next year going to look like? And I think we all agreed we weren't going to set another record on VC dollars invested. But we did, in fact, set a record on deal activity. And I think that really shows the breadth of the ecosystem and the scrappy nature of the VCs and the companies in the state. So the result of that, capital invested was down, deals completed was up. There were a lot of smaller deals. So we averaged 2.9 million per company. Over the last decade, we've averaged about 4.4 million. And in those 2 record years, we were up in the 6 to 7 million range. So a lot of activity. And I think that showed the fact that companies and VCs were reacting to an unprecedented environment with the pandemic and economic headwinds, and really taking stock of their portfolio and saying, okay, how are we going to finance ourselves through this period and position ourselves for success on the back end? So I think you really see that in the data with the level of activity.
Yeah.
My thing was basically just looking at the whole data and how normal it looked. I mean, again, at this time, last year we were looking at, COVID down the line. I always thought that this year would have had, some sort of note by it as a COVID year or something like that. I couldn't have been more wrong. Basically, this looked very normal. Looked, basically, even if we had done the same number of deals in the third and fourth quarter that we did in the first and second quarter, we would have had a record year, and the whole country would have had a record year. So, it was a little more back-ended than we thought, because again, that first quarter was very down. There was a lot of, restructuring deals, a lot of deals to prop up deals and make sure that they could get through that. And then we sort of saw those new deals sort of happen at the end of the year. And at least talking to my managers and talking to everybody, it looked like the end of the year was very, very busy for everybody. There was not a break at all. There wasn't a break for the holiday. So we sort of caught up, that first and second quarter, a little bit of the second quarter, basically, the activity that we had and how, it looked basically. So.
Yeah, I would agree. If I could just add, it was quite interesting at the beginning of a pandemic. I thought, well, here we go. This is going to be all bad. Whatever numbers that we see for this year is really going to be reflective of that. And then it wasn't too long after going through this pandemic, just in talking to folks like yourself and others, that hey, well, let's just put a pause and really not a stop button. And it just seemed like in the summertime things picked up quickly, and it seems like you're all still very busy, which is great. We don't want to certainly focus on how COVID impacted some of this, but we do want to, I think, acknowledge how PPP impacted some of the portfolio companies. Who'd like to kind of touch on that?
Yeah, I could take that, Ara. I think it was interesting to see the impact of PPP, and I was really proud of the VC industry and how we took a step back and said, okay, does this program work for our companies? Do our companies qualify? In what cases do they qualify? And we worked through that, and I think we were able to use that government program the way it was supposed to be used. So companies that really needed that funding to help fund payroll and expenses to get through the pandemic, we're able to take advantage of it. And if you look at the impact of PPP on the portfolio companies, then that 2.9 million average round probably comes up a bit. Certainly for the companies that took advantage of that, that's more like a $4 million round. So we're getting leverage from the VCs in putting a round together, partially funded by insiders, bring in PPP to plug the gap and get that incremental leverage. So I think the program worked really well as intended for companies that needed it. And there were a lot of companies in the ecosystem that said, look, we've got a tailwind from this new digital economy and the acceleration in digital adoption cycles, and we don't need PPP. And they didn't take it. A lot of companies that qualified for it turned it down because they wanted it to go to other companies that really needed it. So I think it was a good program, and we definitely took full advantage of it.
Yeah.
Yeah, I want to note also that it wasn't a done deal that venture capital funded companies were going to get this. So it was great to see sort of the MVCA, the NVCA sort of talk with our representatives and understand exactly why this was relevant and could be a good economic builder for the economy going forward. I do think that we're going to see some very promising companies that will pay dividends over the long term for the whole economy and for the whole country, and especially Michigan going forward.
So let's move on to talk about some of the non-traditional stuff that maybe we would normally start with in this discussion. But let's talk about the angel community for a little bit, the impact that they have, the importance that they are in the ecosystem, along with really the other entrepreneurial supporting organizations, universities, economic development organizations, angel investments. So the other day, the Michigan Angel report came out, but let's talk about really the importance that angel investments do have in overall deals. Jeff, what would you say about that?
Yeah, well, first of all, I want to thank the Angel Community Research Report for the data sort of in this area. I think we're overall seeing the continued growth of the angel community in Michigan. It definitely takes a long time for it to grow, but a 5-year growth rate of almost 300% is amazing. I also think it's showing the growth of this asset class and the more and more people looking for the returns in PE and venture capital that we're seeing across the board at even the smaller stages. also, it's also interesting to see that the average deal size was only $30,000. I mean, this is, a class, basically where we talk about, large deals and everything like that. But this is the areas where it's $30,000 and sort of has an outsized influence, these low individual investments can make in the community. And it's definitely helping us and the whole community move forward and Michigan move forward.
Yeah, and I think I'd add, as the angel community has become more organized and combine some of those smaller $30,000 investments amongst a group of angels, they've started to have a meaningful impact on the filling out a round and the cap table of a company. And it's always great when you have an angel that has experience in the space of your portfolio company. So they come in, their dollars are on the line. They're a great resource for the management team because most of these angels have been entrepreneurs themselves or have operated large companies and can add a lot of input. So we've really enjoyed working with the organized angel community, and it's been a really steady contributor to the ecosystem over the past few years.
So another strength in the ecosystem is sort of the pre-seed seed funds that we're seeing that are coming to fruition. And so I wanted to get your collective thoughts on, we could talk about Michigan Rise, which is very new. It's partnering with the MEDC, but I want to get your thoughts on the importance of that, how that's kind of led to some strong work going on here in Michigan. Jeff, you've got some, added info with a lot of that. How would you answer that?
Yeah, the university community has been very active, and we do have to thank the MEDC for their investment in Michigan Rise. Michigan Rise has been very active, over the last year, and they're actually continuing into this year. So, we're seeing that, boost. I think the number went up, some number that I can't even quote. I think it's like 500% over 1 year. That was mostly from a small base, but it's also showing, Michigan Rise. We're also seeing the university communities investing in their own technology even more and more. Not active this year, but active for 2021 is the University of Michigan and Accelerate Blue. I think they just did their first investment, but we sort of have the Red Cedar, at MSU, and Michigan Biomedical Fund that's always been at U of M. So we're seeing continuing that investment trends, and we're hoping that continues on and on. I think they're seeing that helps the community, helps the faculty, the entrepreneurs inside the university, but also helps the community around them and is helping Michigan tremendously.
Yeah, and I think it's great for the VCs to have that fabric working with the centers of innovation to kind of get ideas ready for VC funding. We always talk about the capital gap in Michigan and the fact that there's more innovation than capital available when you measure innovation by patents, university research dollars, engineering talent. And so anything we can do to organize that innovation and get it ready, get it seeded, and make it a company, then that makes those ideas ready for VC, whether it's in-state dollars or out-of-state dollars, to come fund it and bring and build it up to an operating company. And so anything we can do to increase the strength of that fabric over the innovation centers is really value added to our efforts.
Right. So when we talk about the diversification in Michigan, the economy, Alex, maybe you could bring up slide number 4 so that we can take a look at that by investment by sector. Michael, can you, there's not much that's really changed, with this slide over the last few years, but maybe you could speak to some of these sectors and some of its importances and maybe some of the changes that's occurred this last year.
Yeah, it was pretty consistent. And as we would expect to see, Michigan's always been really strong in healthcare and life sciences. And of course, IT is such a broad category, and most VC investment, even in healthcare and life sciences, touches IT in some way. So as expected, those were the bulk of the sector activity. But really, we need to look at the breakdown because those are such broad sectors. You need to look at the breakdown with the subsectors because there is so much in healthcare and life sciences and so much in IT. And so if you look at the breakdown, Devices represents about 15%, which is high, but that is an area of strength for the state. Pharmaceuticals at 6.8%, healthcare services at 4.8%, and diagnostics at 3.6%. So when you start to break it down like that, then those subcategories of diagnostics and services are more in line with mobility, consumer, and advanced manufacturing. So it paints a broader picture of the industry landscape in the state. And you can do the same with IT. I still think breaking it down to software is overly broad, because software, really, when we're thinking about the sector, it's what end use does that software have? If it's B2B, what is that end market? And so software is 23%, still the highest bucket. Of course it is. And I think we could probably break that down into another 10 subcategories that would be, roughly 2 to 3%. But when you do that analysis at the subcategory level, I think it paints just a really broad picture of strength. So, consistent with other years, but still a broad economy.
Right. Okay. Thanks, Alex, for that slide. Let's move.
Or we could maybe do the same from a stage perspective. I don't think we touched on this earlier.
Sure.
But part of the reason we had the decrease in fund size is we did have a spike in early stage activity. And it wasn't a massive spike, but typically when we add startup and early stage to seed, we're at about 65% of deals in the state. And that's pretty consistent over the last 5 years.
Right.
That increased this year to 76%. So we definitely saw a spike in that earlier stage, which makes sense with the overlay of the pandemic. A lot of the mature companies with the growth rounds could take a pause and say, okay, we've got capital, let's execute through this year, see how our metrics look at the back half of the year, and we'll go out in 2021 for that big round. But the earlier stage companies, they're often running with a shorter runway, funding expenses, higher burn. And so they had to really roll up their sleeves and say, okay, let's get a smaller round done. Let's get through this pandemic. And I think we'll see a lot of those earlier stage deals now come in 2021 with follow-on rounds. So I think that average will come up. But it was interesting to see that difference because it was a very clear trend in the data.
Right.
But it does contrast with the national data we're seeing. I mean, we're still seeing that continued trend of large, big deals being done across the country, and sort of that eating up a lot of the capital. I think this bodes well for Michigan. I mean, it also could be a little bit of the Zoom effect too, also where we saw a lot of the early stage funds switch over to Zoom due diligence very quickly. Again, they were making smaller dollar commitments, where we saw some lagging in the middle of the country, basically for those later stage deals. So, I mean, there's multiple effects going on, and you're right, they didn't need the capital. But I think this early stage, sort of shift, or sort of, this 1 year, we'll see if it continues over a number of years, does bode well for Michigan, because we're going to have a lot of inventory that we can that will be ready for later investment.
Yeah, I agree, Jeff. I view that as a sign of strength, that we have that many quality earlier stage transactions that will mature to the growth stage. I think we'll revert back to the mean next year, or in calendar 2021, as the big growth rounds get done. And I agree with you on the national averages. I think the national statistics probably get overweighted with the mega deals, where they're raising sometimes $2 billion deals in 1 year, right? Or raising $200 million at a $3 billion valuation in January, and then $400 million at a $4 billion valuation in December. So I think the national statistics get pulled up on that. We didn't have a lot of that in Michigan last year. We will have that, and we have had that in the past. But I think that was the difference in 2020 in the state of Michigan.
Let's move on to talking about fundraising efforts in this past year. We've got a couple of different slides that we could take a look at. Michael, why don't you take the lead on discussing how that really went about? Do we want to look at the capital under management slide first?
Yeah, let's
be slide number 2, Alex.
Yeah. Yeah, so I think if you look at the headline on the bar chart is we took a dip in capital under management, but I think the strength that is shown is that local Michigan-based VCs capital under management increased to a record level of $2.8 billion. And This is an important metric. We talked last year how we needed to bend this curve back up. We had a couple of years of consecutive declines, and we felt really good last year. We bent the curve up. So this year, the top line curve went down, but the Michigan-based VC capital under management went up. And I think that's the metric that really matters, because it's a natural evolution. When the ecosystem matures, out-of-state firms set up an office in Michigan. They built relationships with companies, with other VCs. They integrated with the fabric of the community, and then it became less important for them to have that Michigan office. Especially with the era of Zoom, they're able to reach out to their networks without having that local presence. And the metric we really focus on for the Michigan-based VCs is our ability to catalyze out-of-state investment. And that metric came in really strong this year at $9.71. So for every dollar invested by a Michigan-based VC, we brought in $9.71 from out-of-state VCs. That metric 5 years ago, we would say $4 to $5 is a great metric in that area. Last year, we set a record, and that was overweighted by some of the mega deals. But $9, roughly $10, is a very strong a leverage ratio for the community. So if we can continue to have the increases in the Michigan-based VC capital under management and continue to leverage at a $7 to $10 rate, I think we'll have a very strong capital ecosystem here. And I think it's worth noting one other headwind that we faced for capital under management in the year was the strong exit activity, which is great, right? In our year in review this year, we talked about how strong the exit activity was in 2020. Well, when you're exiting, your strong companies that are marked up, that have a high valuation, that capital falls off your capital under management. So despite the fact that we had such strong exit activity, we still increased the capital under management for Michigan-based VCs, which I think is a strong sign.
Yeah, definitely. Let's look at slide number 1, annual VC investment.
Yeah, we touched on this one earlier, Ara, and I think we've kind of covered, the record level on deals, the average is down, and the fact that early stage drove some of that. So I think we've covered this one.
Okay. Yeah, it's good to see the picture of it, certainly for sure. But thanks, Alex, for bringing that up. Jeff, let's talk just diversity in general. We know that there is a disparity. It's no hidden secret. It's in Michigan. It's nationwide, and I'd like to talk a little bit about some of the stuff that we're looking at. But I mean, what are some of your thoughts? Certainly we've gone through quite a bit in this last year, but when you look at some of the numbers are a bit encouraging here in Michigan, are they not?
They're encouraging, but they're also they're hard to look at. It's a slow change basically, and a lot of it has been basically because of the lower numbers of people in venture capital firms. So social justice was the other big term basically over the last year. That and COVID was how I would define 2020. We did a little better, but we can do better. That we're definitely seeing a number of exciting initiatives around Michigan. There's a lot of interesting things around the angel community and the seed community in this area. As the MVCA, we really want to encourage that. We also want to take the best practices from that and leverage it. I know we're doing a number of things inside the MVCA. Ara, I don't know if you want to comment on some of those or.
Yeah, I mean, MVCA has always taken a look at ways of trying to increase the amount of diversity in the ecosystem. But like you said, Jeff, I think this last year has really upped it a bit, and rightly so. We know that it's a major focus. It's a major need. There's missed opportunities out there. We need to see more of an increased network. There's some phenomenal entrepreneurs out there. And so we focused on, in the middle of last year, a bit, sort of highlighting some of those. So not only did we do increased awareness with webinars and We had talked to the folks at Kapoor Capital. It's a member of ours out from the West Coast. We talked about diversity with them. The folks out of Grand Rapids and the Right Place, the new Community Transformation Fund, an exciting new fund that is focusing on diversity. But I think we know that we need to do a lot better. It's a continued focus for us. So one of the things that we started toward the end of last year and really taking a lot of time and thoughtful time and work around is diversity, equity, and inclusion as a committee. So we haven't had this as a committee in the past. So Patty Glazo, Invest Detroit, one of your fellow board members, is really heading this up. We've got a phenomenal committee, and we're really taking a deeper dive into maybe types of toolkits that we can even develop for the investor community. Perhaps it's more of a database of sorts for us. There's a lot of things that we're taking a look at that we can hopefully start to roll out this year. It's exciting, really, for me to see a lot of this work. So it's important work, of course, and we're going to keep increasing the awareness of it as well, through webinars like this and in podcasts. So stay tuned. Yeah.
Ara, I think you brought up some good points there. And I would add the importance of the Diversity, Equity, and Inclusion Committee, and thank Patty for heading that up. And I think that the reason the time is right to do that now is we're starting to see models that are working. So if you look at what Kapoor is doing on the West Coast and the tools that they've used, we can take best practices from some of these programs that have been working to bend the curve, and we can implement those in Michigan and learn from the best across the nation. And I think that's really the goal of the committee. And hopefully we'll see that in the numbers next time we talk.
Yeah, definitely. I think, Jeff and I have already talked about how next year's report can reflect a little bit more. And let's see if we can investigate some other ways to get some more data. So it's important, and there's definitely more to come. I'd like to encourage attendees, again, if you've got questions, funnel them our way. Got two experts here. This is the time to ask these two gentlemen some of these questions. But I guess as we're kind of getting near to wrap up, let's do the old crystal ball kind of question. And so we're seeing the end of this pandemic, hopefully soon, I think. And what are some thoughts on maybe the rest of this year and then going into the next year? Who'd like to?
Sure.
Who wants to do the predictions first?
I can start, and I'll avoid specific predictions. But I think we've already had a strong start to the year, and deal flow is extremely strong. But I think what we're going to see when we looked at the data in 2020, we talked about the impact of a roughly 2-quarter pause on activity. And I don't think we had enough time in the back half of the year to fully catch up. So I think there's just a lot in the queue that's going to come into 2021 that rolled from 2020. And we're going to have a really strong year in 2021. I also think the economy is going to come roaring back when we open up. We're already starting to see it. From a valuation perspective, we've seen some rotation out of tech, which you would expect on the public markets with the reopening. But I think that'll stabilize. I think that's been accentuated by long-term treasury yields. And, if that stabilizes and the economy roars back like we think it will the back half of this year, I think tech valuations will stay strong. Fundraising, there's still just a ton of capital that's looking to be allocated toward good ideas. And so I think 2021 is going to be a really strong year.
Yeah, I would concur the same way. I mean, who thought we would all know, biopharma companies and a startup, even, in Moderna, that would be rolling off everybody's tongue. So I think there's more focus on IT, IT security, which helps into Michigan, the biopharma side of things. The interesting crime for me is also seeing what we're going to take from this pandemic and what's going to change our way we're going to do. I mean, is zooming in going to be the normal for due diligence now? How is that, going to change, how we think of location? If somebody, we have even a number of venture capital firms that, Michigan venture capital firms that went to different locations or just, traveled around basically during the pandemic. So, will that continue? How do we capitalize on that as Michiganders? How do we capitalize in making sure that our companies get the best funding that they need, basically, side of it? Because it all comes down to, supporting these companies, nurturing these companies and making sure that they're getting the capital and the resources they need. If they're Michigan venture capital, which we want, and we want side of it, but also we just want the best, basically, to grow those companies. Because again, we've had some really strong exits, which will help with fundraising for the venture capital community, will help with the angel community. Basically, all of that sort of helps, with the output. So it's going to be interesting to see what we take from this pandemic and what sort of was just a yearly sort of thing that we had to do, basically, as we go forward.
So Michael, you kind of touched on sort of the dollar comparison between the in-state and the out-of-state. And that's something that we talk about, but maybe we could touch on that a little bit further. There's good and bad to that number, right? I mean, it's good that we see out of state that are taking a look at Michigan. I know that when I talk to different out of state VC firms, they like Michigan for all the right reasons. First of all, they like doing business with all of you. They find it easier, more agreeable. Maybe that's terms and whatnot. They also find it to be real fertile ground for entrepreneurs, and then all of the other that kind of follows within that, the community, good quality of life and just a great place to be. And we're talking not the thumb, but also in Upper Michigan as well. But there still needs to be additional funding within the state for more capital to get deployed. What are your thoughts on that?
Yeah, I mean, I think we certainly need to continue to grow the capital base locally. And I think it is a huge positive for the community that out-of-state investors are now much more comfortable in Michigan because they see the quality of the opportunities, the track record of exits, and also the track record of the local VCs. And so there are better local partners for out-of-state VCs, but we need to continue to grow that. And I think if we look at how the community has evolved over the last decade, it's strengthened significantly. And that should be a virtuous cycle. So as more VCs have stronger track records with these exits, they should be able to raise more capital. And then new firms will be formed and they'll raise more capital. And so I think we will see that Michigan-based VC number increase. We are at the point where some of the programs that drove that decade of growth have expired or been fully deployed. And we see some other states in the Midwest doing some really innovative things. And so I do think the time is now for us to continue to work on partnerships with the government and economic development agencies to think about programs that can help us build off the strength we have today. And I know that there have been some recent announcements of programs that I think will bend the curve, and we'll see, they need to be implemented. But, I'm optimistic that while the programs that drove the last decade or really helped catalyze the last decade, I think there's more organic strength now throughout the community where any programs that do help drive the future will be much more as effective or more effective because of the organic strength.
Yeah. Jeff, anything you'd like to add to that?
Yeah, I mean, we talked a little bit about diversity of, the investments in Michigan, but again, we've got to leverage that more with more capital basically around the base. I think as Michiganders, we want a diverse economy. We're very strong in automotive, but there's more and more we can do in biopharma, medical devices, security, IT. So it's a balancing act of making sure that we support the next generation of entrepreneurs, and also where are the jobs that we want our children, basically, that they want. Those are the jobs that we want, and basically we know that this is the future. So it's a lot of work, and it's a long cycle, basically, side of it. So it's much easier to look at 5 and 10 year cycles than it is to look at a 1 year cycle over side of things. But I do think that the investment that we had so far is sort of propelled where we're at, and we're sort of looking at the next programs, basically, to get us to the next spot that the rest of the country is looking at also.
Yeah, well said. We're getting some questions in, and this one maybe is a good natural one to sort of follow up a little bit on Jeff, what you're talking about. We've definitely got some younger entrepreneurs that are watching this today, and so this particular question, which I get often, is younger person wants to break into this industry. They want to be a venture capitalist. What are some of the approaches that they can do to either to become more involved or whatnot?
Yeah, that's a tough one. We get this question a lot, and the interesting thing about the VC industry are there's so many different avenues in, right? And the kind of two most obvious ones are you can be an entrepreneur or work for a startup and get the company building skills to then be valuable to VC efforts in the future. But that's a long run. I mean, you've got to build up some significant operational skills to be at the level where you can deploy capital, and you have to have the financial background to be able to put capital dollars at risk if you go the operational route. Another route is, at the end of the day, we are capital allocators. We're underwriting risk, and the backbone of that is finance and transaction work. And there are transactions when you're deploying capital, there are transactions when you're exiting and harvesting capital. But at the end of the day, it's capital allocation and underwriting risk. So the most natural training ground from my viewpoint for that is traditional investment banking, or consulting with a heavy finance angle, because those skills are really important to be able to model out the risks that you're taking when you put dollars to work. So there's no great answer. And, there are wild card ways in as well. Oftentimes you'll see a really strong research analyst on Wall Street who's covering an industry that gets just great industry domain expertise and knows everything about the competitive dynamics and the capital markets that are backing an industry. That's extremely valuable for a VC. So you could come through that route as well. But usually it's, sometimes entry-level jobs will come up, and it's an apprenticeship type of job, and you can work your way from an entry-level job and work up. But typically, you've got to build up some of those core skills and then make an adjacent move into the VC industry. Jeff, I don't know if you want to add. You see a lot of this from your perspective.
Yeah, I mean, I have conversations with a lot of students. I had one yesterday. I mean, a lot of it is hanging around the hoop. I call that, basically. I mean, I got my job because I was lucky. You have to be good and lucky. So the interesting part now is with social media and a lot of those other mediums now, we have ways of, people can put out their theses, put out what they think are great investments. I've seen multiple people put up, portfolios saying, if I had $1 million, this is where I would put my seed investments. And, people have gotten a lot of jobs that way. So, again, it may not be your day job, but it may be your night job. But, it's a lot of you make your own luck and making sure that, you're there when that person needs that right person at the right time. So it's a lot of work, that's what I sort of tell everybody, but it's also an amazing job. I wouldn't trade it for the world. And, it's one of the best jobs, getting to see the future before everybody else does. So, yeah.
Yeah. I would add that it's just, I still find it amazing. It's so invigorating to watch the work that you all do. I'm not a venture capitalist. If I had $1 million, is a really neat sort of concept to take a look at. But I'm always excited when I see new deals that are happening, new technologies, and I get that much more excited when I find out that they were, venture infused. And so we just started, maybe shameless plug for MVCA a little bit too, is that we just started offering out sort of a quarterly deal flows newsletter that we shoot out far and wide. And if you want to be on our e-news email list, there's no cost. You just go again to our website, michiganvca.org, and you can sign up for that. But really, we want to be able to promote and show as many of these great deals that go on. And it's by no short the hard work that you guys do. We've got a lot of questions, but not a lot of time left. So I'm gonna try and pick a little bit here. I've got a question regarding intellectual property. This is something that all of you deal with, and so last year innovation was up with patent filings up 5%, trademark filings up 9.5%. So can you guys talk about sort of the importance of intellectual property protection in regards to valuation of companies this last year?
Yeah, it's important. I hesitate to say that we see a direct correlation between size of patent estate or size of IP estate and valuation. In certain industries, you have to have that strong IP to protect your idea. Yeah. And if your idea is a great idea, you're going to get a strong valuation. But if you don't have that IP, you won't get that valuation because you won't have a defensible position. So I view it more of a gating issue for certain sectors to protect yourself and to get the valuation than a direct correlation. And with the increase in software and IT deals, there is a cohort of companies that have a heck of a lot of intellectual property that doesn't show up in the statistics of number of patents or trademarks they have. They just have great code and a great idea and a head start. Mm-hmm. And so you're seeing it might be less of a direct correlation than it was even 10 years ago. But it is important. It's hugely important. When we're doing due diligence in a space where IP protection is critical, we do a lot of work to make sure that IP estate is strong. And it's not just one patent. It's a number of families of patents and how you're building on those families of patents over time to expand your property and to expand your protection and also to extend the life of that patent estate. So in certain deals, it's extremely important, and it's much deeper than just, hey, we had a great idea and we filed a patent. That's step one in a long journey. Right.
All right. I'm going to run through some of these here. We had another question. This kind of goes a little bit back to Michael and Jeff, you guys talking about how the optimism for the rest of this year and next year, and that the Biden administration has some different programs that can be coming out and certainly rolls down to the state level. But Treasury announced state's small business capital initiative with a 1-to-1 match that would potentially, I think, apply to VC deals. Any thought on what this impact is going to be like on deals moving forward? Jeff, do you want to take that first?
Yeah, this one I haven't looked at, to be brutally honest. I'm more excited about the infrastructure, some of the infrastructure, if that actually gets done, because we're seeing a resurgence sort of the clean tech industry, which is sort of the, which is sort of the unsec. I mean, some of it goes by different names than we saw before, prop tech, other ideas, but we're seeing sort of a resurgence of that in VC investment. I think it's much more intelligent VC investing than we saw before. So it's much more or less around the infrastructure, and again, more around the ideas and the patents and the key intellectual property that we say instead of building a plant. So I think that's going to be, if it does pass, is going to be very interesting, thing to watch. And again, could, tilt things, to another industry that we see sort of wide opening that we saw pharma basically opening side of it. I don't know if you have a comment on that specific, Michael, or, on that specific program.
I haven't looked at that specific one either, but I would agree with your comment on the infrastructure plan and all of these programs that seem to be recognizing that the innovation economy is critical to the future of the American economy and the Michigan economy. And there are going to be a lot of jump balls up in the air over the next decade to win the innovation economy, and there is going to be a multiple of value created than was created in the last decade from innovation. And for the VC industry, that's really fertile ground. And it's great to see a match from the federal and state level of dollars funding those initiatives well. So while I can't opine on that specific program, if we look at our experience with PPP as an industry and rolling up our sleeves and saying, where does PPP apply and how can we leverage it? And the outcomes we got from leveraging PPP, that was very strong. And so my sense is we'll do the same as these new programs come. And all of these incremental dollars to fund infrastructure, innovation, and just stabilize the economy are fertile ground for the VC industry to thrive.
Great. Well, we timed this almost perfectly. Michael, Jeff, I want to thank both of you for being part of this today, and certainly both for your leadership on the board. And it's still an exciting year. I think that I personally put 2020 as just, I'm trying to ignore that year just in general. I think we all kind of are, but certainly there's a lot of good that's come out as far as the economy is concerned. And we can't cover everything that's in the report here, but certainly we encourage folks, you can download a copy of it again at michiganvca.org. Couple of just sort of closing remarks, and then we'll get moving on the networking portion of this. Again, I want to thank the MEDC for helping sponsor this webinar today, and then certainly to all of our service providers that help support MVCA. Now, just as some reminders, we're going to take a small break and return in a couple of minutes to go into some virtual networking rooms. It will be there until noon. There are going to be 5 different rooms. Please start with a room that corresponds with your last name. For example, room 1 is A through C. After several minutes, please feel free to stay in the room, and then you're all welcome to move throughout the networking rooms and or use the network platform for messaging, chat, video, and all that kind of stuff. But certainly if you want to, like I said, if you want to move around, feel free. If you got a good group, last time we did this at the end of the year, nobody left the group that they were in. So Michael, Jeff, and I will certainly float around, try to meet as many of you. And again, just want to thank all of you for attending today and watching, and for all of you that we can't see, but are certainly important for us to acknowledge. We're very grateful for all the work that everybody does here in Michigan, advancing our economy and helping entrepreneurs in some cases see their dreams. But then also, these are technologies of now and in the future. So with that, I want to thank all of you and wish you all a great day. Bye for now.